Between two waves is what Elon calls it, right? You had the Model 3 and the Model Y, which is largely saturated. The next big catalyst is going to be the affordable car. Unfortunately, that comes in, H2 25. So he doesn't think about things on a day-to-day or month-to-month period, as you probably know very well. He's looking at things from a years, if not decades, perspective. So we're just in between this period of two lulls. Eventually, we'll get this catalyst with this vehicle that'll come out. And there's some long-term tectonic things that people just aren't talking about, which folks like me will start writing reports about and get folks interested eventually.
So, such as?
Energy storage. Nobody's talking about this. This is trillions of dollars of opportunity. Problem is, it's like decades away, potentially. These guys have 15% market share in this business, and the profitability is higher than the profitability of cars. And then, of course, autonomy. Right? There's just a lot of negativity in autonomy today. If you guys ever used FSD, I think it's a pretty amazing product. I think it's the most amazing product I've used since the iPhone. We're finally going to get this version 12 this year, which could get the attach rate up. The problem is not even enough people have tested this thing. Once you have people test it and the pricing needs to come down, that can change things dramatically. People look at it as a software stock, not just an auto company.
Morgan Stanley just released a new note on Tesla, and let me say that it's going to blow the doors off your investment strategy.
So if people had been selling Tesla to buy NVIDIA, you think the best thing to do is to invert that because you've probably made a lot of money on NVDA.
Well, let's be clear, Sully. I'm long NVIDIA and I'm loading up here on Tesla. But I think you're absolutely right. When you look at NVIDIA, it's 3 times the size of Tesla from a market cap perspective. It's now the 3rd largest. But the parabolic move in NVIDIA, if you look at a chart here, just since January, up 50%. And this is not up 50% from where it was cut in half in 2022. This is substantial. This was nearly $1 trillion company. Now to be up where it is, I think it can go from 750. It has to back and fill. So I think with earnings expectations, think about it, Sully. The earnings expectations for revenue for NVIDIA are over $20 billion. That's 3 times. That's 3x what it was just a year ago from Q4. So I think there's high expectations. I know they're printing money right now, but I think there's a pullback short term. You're seeing RSI levels overbought, but Tesla seems to be a different type of AI approach. And I know it's the Mag 7. It's not getting any love right now. It's about to trade 200 today, so we are seeing some buyer step in. But nonetheless, Sully, I think we have to understand there's huge opportunity in Tesla here, and I think you have to profit take in NVIDIA.
Yeah, and I want, you don't want all the, we call them Teslarians. I guess, what do we call the Nvidians? You don't want I think I just made that up. You don't want the Nvidians coming at you. You still love the company, but I get the mentality, which is, everybody's like, oh, drop Tesla. It's not Mag 7, it's Super 6 or Spectacular 6 or whatever name they want to employ to it. I get your take, and being a smart trader is trying to find the opportunity when other people are selling.
That's right, and I'm utilizing options to define my risk. I'm selling a risk reversal here in Tesla, selling the 185 March regular expiration, buying the 200 call. But I think you have to realize, just take a step back, Sully, not to get too wonky here, but from an AI perspective, I know we are really seeing Tesla viewed as more of a cyclical car company. I know it has a tech influence, but think of the spend. NVIDIA got a lot of press for buying SoundHound. They made a $4 million with an M. $1 million investment in that. Right now, this year in 2024, Tesla's going to spend $10 billion on their AI development. So I think from the longer play, I think you're going to see Tesla back and fill up to $300. You have to really put the emotion aside on Elon Musk. You never know what's going to happen or what tweet's going to come out. But I think from a true value, from a true trade perspective, this is a great pairs trade going in next Wednesday, where I think you will see a reprieve or a relent in the price of NVIDIA.
Jeff Kilberg, got a macro view on the markets right now? We just talked about 2 of the most important stocks that are out there, but do you have sort of a macro view? Are we ever going to see this broadening out that some people are talking about, that, all the 3,000 other public companies that exist will finally get a little love?
I think that it is coming, and I know Ryan Dietrich talked about this morning on Twitter about this small cap explosion. If you see a breakout in small caps, that's the breadth you're looking for. But bigger picture, Sully, we can grapple about when, or even talk about if, how many points are going to be cut. But we are going to see a rate cut this year in 2024 of 100 basis points, and that's coming. I don't care if it comes in March, May, or June, but that's coming. And that's why you saw those animal spirits that Kate referred to. You're seeing people trying to utilize that $8 trillion in cash. They're trying to get it to work because they've been chasing, and the bears continue to be in the hurt locker. That's just a fact. So I think there's more room to run to the upside. I think we're going to test back and fill here to this 49.50 level in the S&P 500, but we're going to make new highs, I think, next month.
Most Tesla investors and analysts predict that the automaker will become the most profitable car company this year. While this is possible, there is no denying that it won't be so easy for Tesla, considering that more EV models are being released, and many of them could be strong rivals for Tesla. Although most Tesla bulls maintain that the car company is at a stable point in terms of its growth and valuation, some others may argue that Tesla's valuation isn't as astronomical as it seems on the surface. What will the story be for Tesla? And what is this new Morgan Stanley note all about? Let's dive into the details.
I'm looking at another stock which I don't know that you own, but I'm sure you have an opinion on, like seemingly everybody does, and it's Tesla, which in front of me today is down 5%. Today, it's down 8% this week. You know, the chart looks terrible. The stock looks broken. How would you assess it for those who were used to it almost going in one direction as well?
Yeah, that's a great question. We did own Tesla, as I've shared with you in the past. We sold it last year, and I think we're in a difficult spot for Tesla. If you look at the company, it was at a 55 multiple. Now it's at 50 times earnings, roughly, on street numbers. If you look at the conventional or traditional OEMs, they trade between 4 and 6 times earnings. And at this point, when you're seeing all auto sales kind of slow down, and the traditional OEMs are pulling back on their money-losing EV operations, investors now look at it and say, hey, maybe these are bargains here in traditional auto OEM land. And those stocks are doing pretty well. And at the same time, I think the long term is, still very interesting for EVs. I think the long term we're going to see an EV S-curve in terms of replacing traditional ICE cars in the long term, but in the short term, the view or the tide is going out essentially on favorability for EV stocks, and with a multiple differential of base almost 10x for Tesla versus traditional OEMs. That's a huge gap, and I think at this point in time, we expect to see Tesla's multiple continue to fall.
I love this line.
Tesla is one of the most recognizable brands, not only in the automotive industry, but on the planet. The automaker offers the longest range of any EVs on the market, and these cars are also some of the safest in the world. Tesla has become the most profitable American automobile company. In 2023, the EV maker earned $15 billion, and its revenue jumped to a whopping $97 billion, an 18.8% increase from the previous year. This indicates that despite significant investments made towards achieving green mobility goals, even by other automakers, Tesla managed to remain consistently profitable, proving that sustainability models can be commercially successful without sacrificing the company's core objectives. Hello everyone, and welcome back to Tesla Tomorrow. Morgan Stanley's new note, just like some others before it, emphasized on the massiveness of Tesla's AI capabilities as well as the company's future projects. It also emphasized critical aspects such as the AI revolution, labor shortage, and even autonomous driving. Now, we know that Tesla is a big force in the auto industry, but what if investors are ignoring the fact that Tesla could be so much more that we see? What if sometime in the future, Tesla is so valuable that it rivals the big names today? Talk about companies like Nvidia and Apple. Let's explore a bit. But before we continue, if you like this type of content, make sure to hit that like button, subscribe to our channel, and turn on notifications to stay up to date on everything happening with Tesla. Tesla's CEO, Elon Musk, has said in 2022 that Tesla is on the path to overtake leading global companies like Apple and Saudi Aramco. Musk stated that Tesla will, in the future, be worth more than both companies combined. According to him, he sees a potential path for Tesla to be worth more than both companies. This was at the time when Apple and Saudi Aramco were the world's two largest companies by market value. Apple was the world's most valuable company, with a market value of $2.34 trillion at the time, and Saudi Aramco, which was benefiting from soaring oil prices, had a market value of $2.1 trillion. The two largest companies in the world were valued at $4.5 trillion. Therefore, Musk was suggesting that Tesla's valuation would reach at least $4.5 trillion in the next few years.
To Trading 360. It's time for our 360 round. I want to talk all about EVs and lithium, too. Dryden Pence is with us, Chief Investment Officer, Pence Capital Management, and Seth Goldstein, Equity Strategist, Energy and Resources at Morningstar. Thank you so much for being with us. I'll start with you, Dryden. You know, I keep asking, are EVs still hot? Hertz just had a change in the C-suite because they were betting on EVs and a lot of Teslas, and now changing that and selling off those Teslas and going to use that to buy combustible cars. Once again, they said that it was high operating costs. EV demand wasn't so great, had been waning, I guess, and also had some safety issues. How do you feel about EVs overall, Dryden Pence?
Well, overall, we're still very supportive about EV, both in the electric vehicle space in and of itself, and then when you also look at hybrid technologies. So I think that it's very important for us to recognize that this is a natural progression of adoption of new technology. The early adopters have pretty much done it, right? So you had the wave of people come in early, but now you have the kind of secondary adopters, and the market's maturing. Obviously, Hertz ran into a big problem, probably a bad corporate decision, because there's not enough infrastructure throughout the country to do it. But if you take a look at California, that has a lot more infrastructure, 25% of the sales of cars are EVs. So it's as this infrastructure spreads out across the nation and indeed the world that we're going to continue to see this growth. And 42%, or a lot of countries are pushing EV globally. So when you see these phase outs coming, we see adoption in various countries. We think long term EV market is still very, very strong, but we've just seen this wave of early adopters, and now we're going to kind of modulate as we move through it. So we think it's a long-term trend that's here to stay. It's not going away.
Yeah. And Seth, you're on the same page. You said 40% adoption by the year 2030, right?
That's right. I mean, when we look at our cost and function framework, we tend to think of EV adoption as, having an early market and then a mature mass market. And in order for EVs to win consumers over in the mass market, where consumers are very practical with their purchases, they need to have the same cost as an internal combustion engine, and there needs to be the same function. So long range, at least 300 miles, and there needs to be the availability of chargers in a particular region. We've seen that happen in China, where there's been a massive build out of high power chargers. And even though the subsidy expired in 2022, EVs still grew rapidly in 2023. The US is a little bit behind, Europe is a little bit behind China, and so we think those markets will get there, but it's just going to take some more time for there to be more affordable vehicles to hit the market, so consumers have more options in those lower price segments, and for the fast charger to get built out along highways and in cities.
Tesla's market cap is now under $600 billion, while Apple is worth $2.65 trillion and oil producer Saudi Aramco is worth $7.55 trillion. While Musk's statement revealed a potential future value for Tesla, it is obvious that the car company needs to do much better to exceed these companies in terms of market cap. Think of all it would take for Tesla to beat the two formidable companies in terms of valuation. Tesla has demonstrated an impressive level of profitability in recent years, and the company's potential for further profitability is very promising. As the automaker continues to expand its product offerings with new vehicles, autonomous driving technology, energy storage solutions, and other services, Tesla's revenues are likely to continue growing. Starting with just $862 million of profit in 2020, Tesla quickly grew over the next couple of years to make $5.6 billion in 2021 and more than double that by the year 2022, then $15 billion in 2023. Now, the majority of Tesla's revenue came from automotive sales, while energy generation and storage as well as other services accounted for a smaller percentage of the total sales. The impressive growth in revenues can be attributed to increasing demand for electric vehicles as well as Tesla's continued investment in product innovation, such as the introduction of new models and major upgrades made by the company to its existing products. So think of what revenue would be if other sectors such as AI or even supercharging are fully factored into Tesla's valuation.
All right, this could be a significant development in EV truce when it comes to chargers. Apparently, right now, we are learning that Tesla is open to seeing its chargers in the United States, to Ford and a whole bunch of other competitive vehicles here. This should set a common standard here down the road that might make it easier for people who are leery about purchasing different types of EVs, fearing that there are some charging stations where you can go and some where you can't. Anyway, when I have questions about this sort of stuff, I go to Lauren Fix, the automotive expert, the Car Coach Report's founder. Lauren, how big a deal could this be if people find commonality on where they can charge their vehicles, their EVs?
Well, this could be huge. I mean, the Tesla charging system has been the best that's out there. And what's interesting is if you look at Europe, they've been having no charging issues at all because everything's on the same plug. But here in the US, if you purchase a Tesla, the access was to their charging stations. And that was fabulous for those that purchased Teslas. And then everybody else got on board and we had Electrify America and everyone else, but there weren't enough charging stations. So Tesla made a deal with Ford at first. Now General Motors, Stellantis, Hyundai, and so forth down the road. Everybody's jumping on board. And Ford is the first to have access through their Mach-E and their Lightning F-150 truck to charge at a Tesla charging station, which is really good because one of the biggest issues is finding reliable charging, and this may solve some people's problems.
So Tesla has the most chargers, right? So that makes it easier there. These other competitive systems, they have their own charging systems, own networks. How much of a game changer would that be for them if those people can go to the Tesla charging stations?
Well, you have to remember that a lot of the charging stations, they come different ways. You can get the level 2 charging, which is going to take sort of about the same as it would at home, and the fast charging, which Tesla has planned for their people. That was originally that they sold that as part of the car. You bought the car, you got free charging. That's all changed. And now they're building even more charging stations that are Tesla only. So again, very smart. Elon Musk is very smart about his marketing. And he's going to say, hey, if you buy a Tesla, you're not going to get cut out of having a charging space. You can use my supercharging system exclusively for certain charging stations. But this is really good for all the charging companies because one of the biggest problems consumers are finding with electric vehicles is they love the cars. The cars are spectacular. But the problem is the charging. Either you charge at home, if that's a possibility. Not good if you've got a rental or you live in an apartment. But this will allow people to charge on other people's networks. However, the big...
In full year 2023, Tesla's operating income reached approximately $9 billion. This number lies above that of pure-play rivals like Lucid and Rivian, who both lose money in their operations. As a profitable company, Tesla has a lot of room to keep prices lower for longer to maintain and grow its market share. The car company is less dependent on external funding, which creates debt to manage. That's a powerful advantage right now as financing has become more expensive with the sharp rise in interest rates. As an investor, there are several reasons to stay bullish on Tesla, some which you already know and have heard a couple of times. One of these reasons is that Tesla's valuation is still very reasonable. Tesla is not a small company. In fact, it's worth more than every other American automaker combined. From a valuation perspective, the automaker has better potential in terms of future valuation compared to traditional rivals like Ford or General Motors. Tesla's relatively good growth expectations further justify its valuation. The automaker expects vehicle deliveries to grow by an average compound annual growth rate of 50% over the long term, and this could translate to significant revenue and profit growth. In addition, as electric cars become more popular among consumers around the world and Tesla's brand recognition grows stronger, the demand for their products is only likely to rise. With this combination of increased revenues and brand awareness, Tesla should be able to maintain or even increase its level of profitability in the years ahead.
I mean, just the growth projection feels fast. Is it, Seth? Because right now you're talking about 40%. You said 20% growth for 2024. I mean, no one I know is itching to buy an EV. I had 400 people at my wedding. I don't know anybody who's saying, I can't wait to buy an EV this year. I work on the floor of the stock exchange. I just am not hearing it. I'm sure it's there. I believe you when you say 20% growth in 2024. I just don't know how you're going to get to 40%. What are we at? Not even 5% adoption right now? How are we going to get there?
So for for 2023, the U.S. had about 7.5% battery electric vehicle adoption. Globally, that was more like 12% due to much higher adoption rates in China and Europe. We see those markets continuing to lead the way, and we think China will be at 60% by 2030. Europe will be at 50%, so above the global average. The U.S. will get in line to 40%, but in the near term, in 2024, the bulk of growth will come from China and Europe, where we see more affordable vehicles, we see more charging infrastructure along major highways, and so the U.S. will continue to be a laggard in the near term, but will catch up in the coming years as the chargers are built out.
Yeah, and I want to talk about Albemarle and Lithium Argentina, some names you're watching, Seth, but just quickly, Dryden, which names do you think are best performers? Like, for example, Tesla, which has been down this year and a worst performer in the S&P. Do you think that's, the opportunity is there, or are you looking at Rivian or Polestar or Lee or what? Are any of these buys in your minds quickly, Dryden Pence?
Well, I think more importantly is to look in the components of the various cars. So it's not just the brands itself, but all the ones supporting them. I know you're going to talk about lithium here in a few minutes. But also, I think, as you mentioned Tesla, it certainly has been pulled back, but it still becomes the dominant player in this. And you're going to see other companies go through, and you're going to begin to see, I think, this adjustment period. So where we don't pick one superstar at this moment in this space, we think the entire industry is just going to go through a maturing process, and we've got to look for the companies that are grabbing the greater profits of it. So while Tesla has been certainly heavily affected on this, we're not overly negative on the name. And I think that we just have to recognize that it's not just the brands of the cars, but it's all the down trace of the various companies that are going to be involved in the engineering and the building out of the infrastructure as we run through this.
Electric vehicles have established themselves as the future of the automobile industry. GM and Ford and all the other legacy car makers are now investing billions of dollars to manufacture cars that are good enough to compete with Tesla, as the goal is to reduce the gap with Tesla, who is their main target. Tesla already makes more money than other car manufacturers, and it also has a better advantage with cost. The company seems to have better control over its costs, which is easy since Tesla spends very little money on marketing, as it has a very loyal and established customer base, while rivals are flooding consumers with ads touting the merits of their latest models. Although everyone knows that the path forward is electrification, other than Tesla, it's still difficult to predict which car makers will be the winners in this race. For the longest time, GM and Ford have been the kings of this industry. However, that is no longer true, and while these companies could sell more vehicles than Tesla and rake in more revenue, they no longer make more in profits. Tesla once earned 8 times as much profit per vehicle as Toyota, despite being outsold more than 7-1. Think about that. While it took Tesla many years to become profitable, it's now one of the best performing companies in the automotive industry. Although the automaker has acknowledged that there's short-term uncertainty about the broader economy, Tesla has still disclosed that it's showing no plans of slowing down, even as it faces increasingly steep competition from rivals who are investing billions of dollars in an electric future. What do you think? Can Tesla ever reach a valuation that'll send its stock price to the thousands? Let us know your thoughts in the comment section, and don't forget to tell us what your current valuation for Tesla is. If you would like to know more latest updates about Tesla, then go ahead and click on the next video on your screen. See you there.